Hey, everyone. Thanks for joining us again today for another Althea community call. I'm so excited to be joined with our friends from Elys today, talk about RWAs and Cosmos ecosystem, all kinds of fun stuff. Should be good. My name is Deborah, if you don't know already, co-founder of Althea and CEO of Hawk Networks. And if you haven't had a chance to stop by the Discord lately, we are just kicking off with our IFI DEX testnet. You can try out Liquidity Fusion, which is some cool stuff, and see the optimizations we put into the infrastructure finance DEX, as well as there's some exciting stuff going on in Althea. So we'll get into that a little bit, and also all things RWA and ecosystem, or ethos system, as I'm calling it now. and Elys is one of those projects I think that's very ethos system aligned with Althea. So without further ado, I'll introduce our guests. If you want to tell us a little bit about yourself.
Thank you, Deb. Always good to be on with you. I love what you guys are building at Althea. I'm Hesham. I'm a co-founder of Elys Network. Excited to be on, especially talking about RWAs. We don't get to do it enough. I know we just barely scratched the surface last time when we were on, and there's so much more coming. This is like we're just seeing like things starting to trickle into the industry, right, into the Web3 space. So just imagining where we're going with this and just how big of a sector it's going to be when you actually see the tokenization of real world assets into the crypto space is just so incredible. And I think we're probably, it's one of these things where like it's coming and you're waiting for it to happen, but it's going to be a multi-year evolution, right? It's going to be things that are be tokenized along the way. Some of the things that we'll probably dive into on this space are going to be, like the regulatory hurdles, like what is it going to take to actually tokenize these assets? Which assets should be tokenized? So I'm super excited to talk about it. At Elys Network, we are, obviously all things DeFi, but RWAs will be a major part of what we do. And so we're going to have a relationship with Althea and hopefully be able to have some cross flow of assets and maybe even, list some of the same assets or actually if you guys have assets that exist on your platform, we'll try to offer them as well or integrate them via outposts or vaults or other types of, ways that we can partner up and actually offer more for a user to be able to do more for their portfolio. So there's a lot of different things that we can kind of take this, a lot of directions we can take this. I'm super excited to talk about it today.
Yeah, me too. I mean, one of the things that's kind of cool is that we can bridge easily between our chains with IBC, since we're all part of the Cosmos SDK ecosystem. Althea is a EVM hybrid, right? So people can interact with it like EVM, but then still have access to DeFi things in Elys through IBC. So it's very easy to move things around and be interoperable in that way. But yeah, I mean, if I could just start off by talking about RWAs in the Althea space, I think we've been doing real worlds before it was cool. Back in 2017, we were looking at the systems and the financing of telecom and infrastructure, created the machine-to-machine payments, and then realized that the way that people fund and have value and have participation in the infrastructure of networks also needed sort of revolutionizing as well. Like that piece needed to be solved. So it was sort of a natural fit for us to develop basically what we call liquid infrastructure, which is tokenizing and fractionalizing the assets and the revenue streams from things like fiber optic cables and radio towers or ISP networks themselves and all of that. So, and that's been going really well. I think it's pretty exciting to, have that opportunity be open to more people and to look at how we can, kind of creatively build things together more openly, which is sort of the ethos of blockchain. So maybe you could share a little bit about like Elys's story. I mean, you guys have been OG in the space forever too, right? But Kyla got started a while ago.
Yeah, it's been a little over 2 years now. So pretty excited about, how far we've come and how fast we've been able to build it. I think, talking with other partners and other teams in the space, they're all pretty amazed that we actually did this in 2 years and are on track to really, just with all the features we're rolling out they're still amazed that we've been able to do this with a team of less than 15 people. So I know you guys carry a lightweight team, and what I've noticed in the space is the smaller your team and the more agile you can be, it allows you to actually be a little bit more efficient. If you're carrying a team of like 40, 50, 60 people, it's like a big boat moving, it's like a cruise ship. You're trying to really get everybody, on the same page, and it's it can actually have diminishing returns. So for us, that's been probably the thing I've been the most excited about, is just seeing how our team operates in terms of, being efficient. A lot has happened in these 2 years. I would say that, market backdrop has been extremely challenging. We've had a couple of, let's say, false breakouts or false, bull runs, or they were real bull runs, but they got stopped in their tracks pretty quickly. And what it does for us is we try to tune out the noise of like the sentiment of whether it's bullish or bearish on that particular day or quarter. Instead, we just put our heads down and build, because we know the long-term trend is up. So in our situation, it actually helps us to be able to build when there's like less hype and excitement in the space. Just kind of allows us to be less distracted. What I have noticed in the past is if you have teams that are trying to build fast just to capture an uptrend, they tend to maybe get out too far ahead of their skis, and then that's where mistakes get made. Maybe coding mistakes, maybe strategic or tactical type mistakes in terms of their decision making. So for us, we actually have a real advantage in having built in essentially a bear market. So with that said, it allows us to also see the mistakes that have been made in the past and then capture the opportunities of what's available to us today. The big things, I've mentioned this before, maybe we talked about it before. The big things are like DeFi has transformed in a very, very amazing way, because the old days, you kind of had a limited infrastructure and what you could actually pair your pools with, what type of assets you could have. Now, like you're saying with RWAs, you are able to tokenize just about everything. And in our case, having USDC native to the ecosystem is so important for how we designed our platform. That didn't used to exist. And so we have so many different things that we can capitalize on and move forward with, which is why we are now able to offer a user the full, let's say, centralized exchange experience, but in a self-custody wallet. And that's really, really important because of the decentralized ethos, having self-custody, making sure that, you don't carry that risk. And another benefit of RWAs is that you get to have that self-custody in your own wallet. You get to have, whether it's fractional ownership or ownership of the real estate, the commodity that you happen to hold in your wallet, it's all yours without some sort of intermediary or third party. So it's pretty exciting. And I think that's one of the things that you guys were leaders in the space on, because like you're saying, you were building it before anybody else was even talking about it. I'm very excited about the opportunities for a user, or a member or somebody who is participating on Althea, to be able to add this to their portfolio and either earn some sort of steady passive income, maybe even like create other yield opportunities for themselves, or maybe even, I don't know how far you guys plan to take it, whether it's, offer more DeFi functionality, but I'd love to hear more about that as well.
Yeah, absolutely. Just to kind of speak to your earlier points. I mean, I think we are seeing this shift, like return to practicality, right? With the blockchain industry kind of coming full circle back to that, real world. I always think it's kind of a funny name too. It's like, well, are we insinuating that other things are fake if we're saying some things are real world? So I think it's kind of a funny misnomer, but I really think it really speaks to the practicality of this. Like, how are we intersecting with more practical types of revenue flows, right? Things like yield from a treasury note, or things like with Althea with the telecom assets. And to your point, you do see some projects obviously that are more like of the meme variety, right? That are looking for a shorter life cycle. Versus things like Elys and Althea that are looking at, hey, what's the practical, sustainable approach to building, and yeah, definitely that kind of approach to a lean team and building for, practical and sustainable revenues makes a lot of sense, obviously with stable coins. But yeah, I think the thing with RWAs is not just that you're obviously intersecting on chain, bringing basically revenues and payments on chain. it's that what you can do with them when they're there, right? So things like lending become very interesting. We were actually even thinking about ways that we can use this for liquid staking, right? So the liquid infrastructure, which actually tokenizes revenue flows, could do that with the inflation as well. Of course, you can lend and borrow against these cash flows that come off of an ISP network or a radio tower that's leasing space, or so I think that's sort of the natural evolution, is like, this is what we kind of call this infrastructure finance, right? It's like the marrying of an RWA with the idea of all the potentiality of DeFi. But yeah, I do also think, to your point, the self-custody piece of it is really, really huge, right?
Yeah, absolutely. And what you're doing also is providing access where it didn't used to exist for many users, right? The things that you just mentioned are typically reserved for very high net worth individuals or entities who are able to either purchase large amounts of assets and then use them as collateral for borrowing. And then they can kind of leverage their positions and then continue to grow their businesses or grow their asset or their net worth. And now we're actually finally democratizing this type of functionality. And the way that we're doing that is through RWAs. And to your point about the name RWAs, it does make me laugh. I think we probably wouldn't have had to go through this if the term metaverse didn't exist before. So, that was a hot item for about a year and everybody was talking about metaverse. And so now we have to be like, wait, but we're actually doing the real world stuff too. So,
song, and yeah, there was the like kind of the hello fellow kids vibe, as like Web2 had tried to embrace the ethos of the revolution that has been blockchain in general, right? So it was interesting to try to see that trying to be co-opted by, like you said, the metaverse and kind of that traditional IT or Web2 space, and just very much fail, right?
oh, yeah.
It did have that, like, basically backwards baseball cap and like hello fellow kids vibe.
Oh yeah, absolutely. And I have no judgments against anybody who tries to bring out a new concept or wants to run with something, and if it doesn't work, it doesn't work, right? We're pioneers, we're all trying new things, and when they don't work, it's okay. I just appreciate when there's transparency about it, and when there's like, hey, the risk that we take when we're trying to create something totally new, we're trying to innovate in the space. We just want to make sure people understand those risks. And that's another thing I really like about RWAs is right off the bat what you're actually participating in. So you actually reducing your risk in terms of what the assets are that you're participating in, because they're known quantities. What the difference is now is you can then focus on the tech, right? You can focus on how you want these to be deployed, what chains they'll live on, how they'll be interoperable, user interfaces, user experience. And to me, that's where I like to live. I like to be in a place where I understand what I'm interacting with, and I understand like what my opportunities are to earn yield. So this is going to be a wildly popular space. And I can tell you, just from having talked to some of our advisors who come from the institutional level, or we have a couple of advisors coming from the Fortune 500, corporate space, and they're all saying RWAs are where they want to be. Institutions are actually waiting for this because it gives them more flexibility, more optionality for them to also, leverage up their balance sheets. They want to be able to create yield opportunities, have a user base in a different space. And so we have a lot of different avenues we can take this. And that's the beauty of what we're unlocking, right, with tokenized RWAs. Now, I also think the great part about this is you have, when we finally have this market kind of like in a mature stage, you're going to have really, really great like efficiency, liquidity, 24/7 markets. You're going to have a lot of the restraints that you currently see in the traditional world. Paperwork, all sorts of bureaucracy. You got to talk to 10 different people before you conduct your real estate transaction, all those different things, right? I mean, for those of you who have purchased real estate, you all know how much of an absolute nightmare that is. I mean, the number of people that you have to talk to and the processes and approvals and everything. I mean, we're solving a real problem here, right? So this is one of the things I get really, really excited about. And specifically to what Althea does is you're unlocking a market that most people just generally don't even think about, right? In terms of the infrastructure for networks that you guys are going into. That's an area I've never even really had an opportunity to invest in. And so I'm very, very excited about this because there's real opportunity in there. It's a high demand product. It is a high margin once you get a large user base, when you have volumes. And so it makes sense as a place to maybe consider some passive income.
Yeah, I mean, I think for what's interesting about, the internet is very much like energy, right? These are, so they're not market dependent, right? You're always, for the most part, you pay your internet bill, cellular companies pay their lease payments, right? So, you create something that is real kind of legacy infrastructure, legacy not as in old, but in things that last a long time and build real value. What's also interesting is that we see this is really allowing people who build networks or people that are invested in their communities to be part of those networks that they are using, right? So it's not often that we, when we get a Comcast at home or AT&T, we don't really have that governance, that choice, that agency. And with liquid infrastructure, that's very much a thing, right? We have community builders who are, have many different stakeholders that have a part of that network and are having value while also still being the user part of it as well too. So I think for me, that's really exciting to see that almost a cooperative type of structure come to fruition.
Absolutely. Yeah, this is something that I think is going to be really, I think people will have their eyes on what you guys are building, and they're going to want to follow suit. Somebody has to be the first person to kind of make the move. And I think that it's really great that you guys are the ones that really thought about this years ahead of everybody else. And so you have an advantage. You have first mover advantage. You have a really great set of exposure to like high revenue, high margin, always in demand, very resilient type, I guess you could call it a business or some sort of revenue stream. So this is pretty exciting to see this being the first like real proof of concept with RWAs that's in a specific industry. And so other people are going to have eyes on this. They're going to want to see it succeed. Number one, right? I mean, they're going to want to see this really be something that people get excited about. You have an opportunity to onboard millions of people that will come in and be able to, partake in a fractional ownership of these assets and then earn a yield off of it and be super excited about it. And then gives them more optionality to decide if they want to take some of the revenue that they have received from these, from this infrastructure and either use it to, pay for their living expenses or reinvest it back into Althea or reinvest it into Bitcoin or reinvest it into wherever, right? And so that's the beauty of, how like people construct a portfolio is you have the optionality. They're not locked into one decision or locked into like a very traditional style. You just got to go 60-40. So you're giving them a real alternative investment that actually makes sense. So typically when you think of like something in the alternative investment space, it tends to be very, very high risk. And I love that you guys chose something that is actually paring down the risk, but gives you reliable revenue. So it's really, really great that you guys are doing that.
So how are you guys thinking about, so let's say, obviously RWAs, we're here with people that are participating, they're getting regular returns. How would they then utilize the Elys DeFi infrastructure, right? So they got USDC. And there's all kinds of interesting tools now, that we have IBC and interchain accounts. Just think about creatively the different ways that could occur as we get these things off the ground.
Yeah, absolutely. So if you are, let's say you're earning your yield on Althea, do you plan to pay that out in USDC? Is that the current plan right now? So that's great. So USDC, yeah. So USDC Noble is the native version of USDC across the Cosmos ecosystem for those of you who may not have had a chance to interact with it yet, which is really great because it makes it very, very seamless and easy to move that USDC across networks using the IBC protocol. So this typically is under 1 cent, and oftentimes a fraction of 1 cent to move these assets. So if you wanted to maybe expand your DeFi, options, and you want to take it to another chain, very simple to do. You do it in about 15, 20 seconds. In my actual experience, moving these assets takes under 10 seconds. It just depends on the performance of your relayer, volume and demand at that time that you're making that transfer. But very, very simple, and it stays in your wallet, but it'll have your wallet address that's associated with the same wallet on that other chain. So very simple. You can always send it to a different wallet, but that's typically, if it's just really up to you on how you manage your wallet, situation, because there's a lot of different ways to do it. So let's say, so now that we got that out of the way, let's say you move some USDC to Elys because you want to try out some different things. We have USDC vaults, which you can just park the USDC and earn a yield. You could actually move it to Noble and do their USDN composable yield stablecoin, which has a couple benefits there. It kind of acts like a treasury. I would imagine you guys will also have probably treasury exposure on your IFI decks. Is that right?
Yeah, we're doing we're actually looking at SUSDS, right? So obviously with the community support, but this is the DAI yield stablecoin as well too, which will also be in Cosmos. So I think that's the cool thing about Cosmos is you really kind of get all decks in one, right? So you can swap around and park wherever you need, whether you're thinking about doing the Noble version or you want to utilize the DAI stable or I think it's Sky now ecosystem. Right. And I think that yields around 5% or something like that, too. So there's really that's what's kind of neat is there's a lot of choice and agency about, where you might want to, use your finances, which is really the thing we're trying to get to is open and a lot of agency around your financial ecosystem. However, the user decides to use that. So I think that's pretty exciting.
It's extremely exciting. And the best part about this is you can get to the point where you have zero reliance on the banks, on a traditional bank. And that's really what I think is the most exciting about all this is we don't talk about it enough, right? We don't talk about how what Althea is building and Elys and all the different platforms that are out there are giving you an actual alternative to banking. Or if you may live in a place where you don't have reliable access to banking. And so this is really unlocking again some real opportunities for somebody to put themselves in a much better position in the long term in how they manage their personal wealth or take care of their family. So this is how I like to view this is you're growing the pie, but you're also making sure that each person who's participating in that gets a little bit of freedom, gets a little bit of ability to make decisions for themselves, and then they can continue to expand on that as they gain more experience or get exposure to different types of strategies. And we'll try to in that process make sure that we're doing it methodically. We're not rushing to it. We're not doing it in a way where people will make mistakes because the one thing that you do when you have all these options and you give people the flexibility to do these things is you also give them enough rope to hang themselves with. And that's a real issue in the space because of what we've seen with the destruction of meme coins. And I think it's a necessary thing that happened in an industry. There's demand for it when you have people making investments in things that tend to be very, very high reward. But the risk is so unbelievably outside of the normal range that I think the unfortunate part is that people don't see that until it's too late, or they're willing to go ahead and just throw some money away. It's a lot different than, let's say, some people who have large gains because they're Bitcoin OGs, or they had made money in the TradFi space or whatever. And then they come in and they just risk 1% of their portfolio on some meme coin. And then they make some money off of it, they exit, and then they watch everybody else burn, right? And that's why I think I tend to I really, really, really have a hard time with why there's so much demand for those types of assets. And that's why I gravitate to teams like Althea and teams that are building things that actually have tangible value at the end of the day. I want to see people feel comfortable and protected in what they're invested in, rather than checking their portfolio every single day, worried about whether their meme coin is going to crash because somebody's going to exit. And that's really, really important to me from a moral standpoint, from a, hey, I want other people to succeed standpoint, because the greatest gift you can give to somebody is not money, right? It's opportunity. And there's a big difference between the two, because opportunity can unlock vast amounts of money for you. It can unlock vast amounts of education, skill, opportunities for your family, right? You pass that down. And so I'm much more interested in the opportunity side of things, because I think that's the thing that's going to create this flywheel and create this ability for more and more users in the space to flourish and not have this really destructive one-time event where they lost all their money in a meme coin and they walk away from the industry forever. Those things are not helpful to anybody. And I think the important thing for us is when we're trying to grow this space, we want to grow it in a credible, responsible way where people are confident and they trust the people that they're interacting with in the general sense that yes, the platform that they work with is secure and safe and sound, and the assets that they're involved in are generally lower risk than what's been advertised out there. So long-winded answer there, but I really wanted to dive deep into that one. I don't get to talk about it enough, but it's something that's near and dear to my heart, and I want people to be aware that like we're always going to be plagued with these speculative assets that are out there that are trying to bait people into this like money transfer, wealth transfer schemes. But what you're building is a real revenue generating opportunity. That there is no wealth transfer here, right? This is customers purchasing a service or a product, and then you as the part owner of that product receive some of the revenue from it. Like that is sustainable. That can work forever versus whatever's happening on that speculative side, which is just very temporary, and somebody gets hurt by it. Somebody gets hurt, and that is I think the biggest takeaway. Somebody gets hurt there, whereas what you guys are building, everybody benefits. The user benefits because they get a premium product, and the infrastructure owner benefits because they get paid for providing the service.
Yeah, I mean, I resonate so much with all of that, and definitely, I think over the last, we've been building for 7 years, and so a lot of times there's like, well, why so long? But to your point, it's the dedication to creating an environment that's reliable, that's credible, and so it's really very much just one process, that one foot out in front of the other, that we feel like we can stand behind. And I think just in general as an industry, there needs to be more of this where we are collectively holding responsible and having that kind of peer review, so that we can evolve, right? To your point, like we maybe DeFi summer was exciting, there's obviously was a lot of excitement around that, but in order for us to create the environment where many different people can participate without getting hurt, I think we all need to collectively step up and create these kind of peer reviews and call out when we see these things happening that aren't right, that aren't productive. So I really do appreciate that. Very much resonate with it after being in this space for a very long time. And yeah, but I think also too, you said a couple of points too that I think also resonated with me. I live in a rural area. I don't have a bank for, an hour or so either side. So, we think sometimes about these, America must have access to banking. It's available to everyone. We've built networks in places where they're very cash focused, right? Don't have any access to banking, or bank at the local gas station, where they can cash checks and so forth. So this isn't a solved problem. Access to banking, I feel like, is probably actually getting a bit worse. So these sorts of tools and opportunities are huge in order to make a better world.
Yeah, absolutely. It is getting worse in a sense that the brick and mortar locations are probably going away. They're very expensive to operate. If you talk to anybody in the banking industry, they'll tell you that one of their biggest expenses is that overhead on the actual physical locations, right? So you'll see a lot of these banks that pop up that actually have no physical locations, like SoFi, right? Because that's an easy item that's just removed entirely from the balance sheet. Sounds great if you have access to all the different protocols to be able to have that account and never need to actually physically walk in. But there are still so many things that require a human to get you through the process of either getting a loan or, obviously we talk about the buying a home experience was just such a disaster. And I cannot believe it's existed for so long and nobody's done anything about it. And then all of these different things that still require you to have face-to-face interaction or have a human behind the other side of the screen. So we are solving a real problem here by giving you an opportunity to replace all those banking functions, but then you'll just have direct chain interaction. So there won't be a person approving or watching your transaction. I guess anybody can watch it on a blockchain explorer, but they're not actually sitting there managing your interaction with the chain. So when you conduct an interaction, it just happens. When you submit the transaction, it just happens. And I think that's really important from the trust, transparency, and efficiency side. Right? We don't talk about the efficiency of this too often, but it really is. And so, you hear a lot about like maybe people get bogged down on the technical aspects of like, well, is my blockchain fast enough to handle these types of transactions? Or, is how many transactions per second can this blockchain handle? And the reality is like, these are questions people don't really need to get too granular, if I can say the word correctly, on, because if it's even slightly faster and better than what you can get in the traditional world in the banking sector, et cetera, then it's good. And then you can continue to make it better. So, maybe people who aren't fully aware of how blockchains work, you can have a block time, standard Cosmos SDK block times are about 6 seconds. You can bring that down to 5 seconds next week. You can bring it down to 3 seconds in a year. You can bring it down to 2 seconds 2 years from now. In other words, you can scale it. So you can do whatever you want with it. So it's not like we have to be super technical about like, oh, is this chain limited right now? You can always upgrade the chain. In fact, Ethereum did it, right? Ethereum did a huge upgrade. They went from proof of work to proof of stake. And then they're still actually fairly slow, if you want to say, the 6 to 9 second block times. But they do all of those banking functions that they have right now quite well. Elys Network has a 3.5 second block time. We're going to have plans to get it down to 1 second, but we'll do that as we scale. So we'll do it as more users come in, and then the demand to get it faster exists. So in our case, the demand would exist if you have high frequency trading, or if you have somebody who is using order books and they want like instant settlement. Yes, you do need to bring your block times down for that. So we are fully aware of like where the technical constraints exist and don't exist. But for the most part, there aren't really too many technical constraints when you look at how blockchains outperform the banking industry. So I'm super excited about like just watching that evolution play out, because I think, like I said, people get bogged down on certain things thinking that that's a blocker, and they're not. Transactions per second. Oh, 10,000 transactions per second. That's not a lot. It's a huge number. Like when you think about how, like in the banking industry, how many times are you watching banks make 10,000 transactions per second? They're not, right? So I would say that if that's one of the things that's kind of keeping you from being in the space, or keeping you from from putting your toe in the water, don't worry about it. Those are not the issues. The issues that you do want to be concerned with are the reliability of your chain. Does it have solid uptime? Does chain halts can be pretty disastrous, right, for people who have funds at risk. Is the chain secure? Has it been audited by a large player, that can really vouch for this project, et cetera? So those are the things that I want people to be aware of. Is think about what you're participating in based on, like the credibility that this project brings, the exposure that you get to the assets that are on that chain. Like, is it something that is like relatively low risk versus high risk? And then those are the types of things that'll guide you into, managing a really robust portfolio, so that you're not watching your portfolio swing, down 50%, up 50%. I mean, that's going to have to start to get, tamped down a little bit, so that people aren't, constantly reacting back and forth.
Yeah, one thing you said too that was interesting too, was kind of like around, the automation and machines, right? So Althea, we think about scaling very much like different transaction prioritization and batching, and like there's a lot of really cool things we can do around, thinking about block space and optimizations that allow us to scale without the huge centralizations of very fast TPS chains. Because that's one of the other things that's kind of like the elephant in the room about chains that focus on TPS, is they often do it because, and they're very latency sensitive in that way then too, right? So what you'll find is those chains are all, centered around just basically one data center, because they can't really absorb a global latency sensitivity, right? So it's interesting when you prioritize something that's probably somewhat, to your point, fairly impractical, right? TPS speed, we don't really need that right now. It's not likely that will be a consideration in the short term, or probably near term future. And what you're sacrificing is decentralization of the operator set, right? Everybody's in the same room. But yeah, so I'm just curious too about your thoughts about, the emerging machine economy. Althea made a machine-to-machine transaction. Obviously, AI is coming. People are talking about agents and so forth. So what's the Elys perspective on that?
I love it. So for us, I always view things in the relative to time. So anytime that you have the ability to compress time or save time or make better use of your time, you are doing something good. And it may not always be the case necessarily if you're talking about like a human interaction. In the human interaction, maybe time is like one of those things where you want more time, you want to slow things down, you want to, have that moment last longer. But in everything else in your life, you want to compress time. You want time to go. You want to make the most use of your time, and it kind of goes hand in hand, right? The more time that you can save doing these functions in your kind of professional life or your hey, I need to make money life to support my family, the more time you get with your family, your loved ones, the people you care about, travel, self-care, whatever it is that you want to do. So when I see this incremental saving of time or efficiency boost where people can do more in a lesser amount of time, I get super excited of what it's going to do for humanity. Productivity is the reason why we have the technology we have today. Productivity is the reason why we have things like Moore's law, where the chips kept getting smaller and smaller by half every year, whatever. So those are the things that I like. I'm very optimistic about when I think about machine to machine, AI, all those things. What are we actually doing with those things? Are we replacing human functions, or are we allowing a human to do more? And I take the other side. I take that latter, right? Which is we're allowing people to do more. We're not replacing what humans do. We're allowing people to do more. And if there's a specific function where a human finds themselves saying, my skill set has been removed from the market, that's not necessarily a bad thing. Historically, what we've seen when that happens is typically that human can actually be retrained into a better paying job. In fact, that is, I think, so accurate in terms of like looking back at all of the jobs that have been displaced by technology, like all of them. People have been able to go out and get better, higher paying jobs. So the example I'll use today, which is controversial, is the Uber driver, right? So an Uber driver, depending on where you live, generally is considered not a high paying job, especially with the amount of that actually goes to the driver versus what goes to the company. But there is an obvious indication that the Uber driver will be going away as cars go driverless, right? We go to fully autonomous, full self-driving, and you're already starting to see it with Waymo. You're going to see Tesla robotaxi. So the Uber driver will go away. But should the Uber driver be upset about the fact that they're going to lose this job? And I would argue that while it's a very difficult transition for the driver to have to go and retrain and find a skill and go into a different workforce, they will actually be better off, right? Because once you have that functionality where you can just hop in a car that doesn't have a driver and you can get somewhere else, you can be so much more productive. You now are able to do your job while you're in that car, which is really cool. So that's one thing. The other thing is the Uber driver, because they're paid so little, they will easily retrain into even the maintenance of those cars, which will pay more. It can be anything in the AI space, with maintenance. It could be anything in the service industry, which pays more. So again, I use that example just as because it's one that most people are very familiar with, in how technology is going to unlock more productivity and more improved lifestyle for these drivers. I don't want somebody to grow up and say, I want to be an Uber driver working 8 to 12 hours a day, making way less than I should have been because the company I work for is taking too much out of my pocket. And so that's a really sad thing, right? It's a really sad thing. And I know some people really enjoy that job as a side income, but they will always be able to replace it with something better. With that said, what opportunities you get from the passive income side by being a participant in Althea, right? Being a property owner, being an infrastructure owner, you may never even need the job. You might be able to just live off your passive income that you get from Althea, right? So those are the things that I want people to think about, is how this is going to make your life better, how you're going to be more productive. You're going to be able to do more with your time, and you're not going to be forced to have to be, your time taken by somebody else who's making money off of you. So this is the thing that gets me excited. It's all about that time element.
Yeah, I love that. And if I could take it a bit of a step further, into thinking about how you can utilize ownership in that. So if we think about the Waymo or the Tesla example, those are all kind of companies, right? But we can, what blockchain allows us to do is participate in these in ownership, and perhaps in fractionalized ownership, right? So you could take your car, you could be part of a cooperative of cars or fleet of cars, participate in that ownership and revenue streams, and be part of that value of an economy. And so I think that's what's so exciting about what that merging of blockchain and the new kind of emerging machine economy can create. Because ownership, to me, like, you can have ownership and agency. You have that kind of choice about how you want your car, your infrastructure, to relate with that. And you have that agency, meaning you have that leverage. You can take that piece of equipment and have that work for you and create and have value coming back to you as well. So I think we used to call this DAOs, remember, back in the early Ethereum?
Oh, yeah.
Well, before there was a DAO, there was a cooperative. And it takes these same principles of ownership and being able to have choice and agency within a group or a fleet of infrastructure, and then having value and choice in that too. So I'm really excited about, kind of what you're saying there. Obviously, we're getting back time, but we can also now participate in that economy too.
That is a huge way to build long-term wealth, to take your reliance off of any individual or single thing that can essentially cause massive disruption to your life. And those are, again, things that take a long time to set up. They're not things that you can do overnight. They're not things that, there's no flipping of a switch and then you say, okay, I'm set. I'm fully self-sustaining. I don't need to worry about anything. This is something that tends to get built, if you think about it, over generations with very strong family legacies. So if you think about, for example, a very high net worth family that has existed for 100 to 200 years, very famous in the newspapers, Rockefeller style, right? How did they all start off? They started off, generally the first person in that lineage started off probably very poor, and they were able to work a job, save enough money, and then eventually purchase some assets. That's essentially how every wealthy family has started off, is they get to the point where they either run a business or purchase an asset. When they purchase that asset, they hold on to it forever. They don't let it go. Then they are able to purchase another asset and another asset and another asset. Obviously, the most obvious example would be real estate. You end up getting to the point where you purchase enough real estate or other appreciating assets like stocks, etc., where you can then pass those off to your next of kin. You can also borrow against them, which is really, really important, and which is one of the things that DeFi is going to be unlocking, especially when you talk about RWAs. Once you have this collateral, you can borrow against it. And you can borrow against it responsibly. And the reason you can do this versus selling the asset, which I would say the biggest mistake that young people are making right now, is they're making a lot of money in Bitcoin, they're making a lot of money in these in stocks and et cetera, and they're selling it. And that is the mistake that they're making, and that's the mistake that high net worth people don't make. They hold those assets and then they borrow against them. They borrow against them responsibly, right? With a small loan to value. But when they do that, you get two advantages. One is you don't pay the taxes, because when you don't sell the asset, you don't owe any taxes. So your interest rate that when you borrow those assets is actually less than what the taxes you would have owed. So it's very, very smart to borrow against your assets. People think borrowing money is bad, but when you borrow against your assets that have tremendous value and are going to hold that value, very stable value like real estate, and your borrow rate is much lower than your equity, then you don't have to worry about getting liquidated, like getting your house taken away from you, your property taken away from you, because you're doing it responsibly. But what you can do is go out and buy another house with that loan, and then turn it into passive income. You can go out and buy more dividend paying stocks and turn that into passive income. And that's how they do it. It's been kind of a secret, right? This has been kind of thing that these high net worth families have been doing for 100, 200 years, but the rest of us who are blue collar workers didn't really know about it growing up, right? It's not taught in schools. It's not something that you generally find on the internet when you do your search for how to get rich, right? These are things that you kind of have to learn along the way through just financial education, self-education, or knowing people who already do these strategies. This is really where I get excited about DeFi, really where I get excited about crypto, is because now everybody can do it. Everybody can build up some sort of assets that are appreciating. Can't be meme coins, right? It has to be something that's really stable, really reliable in terms of how it accrues value. And then you can use it as collateral. You can use it for peer-to-peer lending. You can use it for anything you want to create those opportunities for you to build your wealth. And eventually what you end up doing is having multiple streams. So where you're not exposed to any single one point of failure, where let's say you have, a lot of these real estate owners end up having, let's say 50 to 100 properties. So if 10 renters can't pay the rent, it's not a big deal, right? They're still getting rent from the remainder of the properties and it covers the shortfall and they still have enough to feed their families. So, and oh, by the way, equity is being built in those homes. You're eventually not going to owe money on those homes either. So it's the system's working all over the place for you and it has built-in protections. So there are doomsday scenarios, of course, and we always try to find ways to hedge or protect against those doomsday scenarios. But this is where in the DeFi space, if you are able to build those kind of strategies where you have 8, 10, 15 revenue streams flowing for you, you are very well protected. And then you can build up a little savings pile for that doomsday scenario when things get bad. And then you can start triaging what you need to triage. You can figure out which assets you might have to let go of, which are typically your borrowed assets. That's okay. You let them go. You take a loss on them, but you are still net in the green because you've been making that income over a certain amount of time. These are the strategies I want people to think about. I can't give you the advice on how to build it for yourself, but what I can do is let you know that these opportunities are being created for you. And again, the greatest gift out there is opportunity.
Well, with that said, what's coming up with as we're kind of coming up to the top of the hour? What's coming up with Elys? What should people keep an eye out for?
Oh, we got a lot of good stuff coming. So we have we did a couple major changes to our chain that are going through an upgrade proposal right now. So that proposal should be closing. I think it actually may have just closed. I have to take a look at it. But that means next week you will see expanded vaults. So previously we only had one vault, which is USDC. We called it the USDC earn, which we talked about a little bit earlier. You could deposit your USDC there and earn a yield. The interest that you earn there in USDC is based off of the borrows. So people borrow from that pool to enter a leverage liquidity provision position. So now, besides USDC, you'll be able to do it with other large assets. So like Atom and some of the other ones that are going to be trading on Elys. We have 15 pool pairs right now. We'll continue to expand those. So vaults will be available for just about every Oracle-based smart shielded pool, which is exciting for us because it allows a user to now borrow other assets besides USDC. So, and it allows the provider to now just single asset add to a vault versus be in a liquidity pool where you have to be paired with USDC. So again, more functionality, more options, and more risk diversification for people who are willing to take a certain amount of risk. There is liquidation risk for somebody who borrows from these pools. They will pay a relatively high margin interest, right? Because obviously these are very speculative things for people to do when they borrow to take some sort of leverage position. Generally, the risk is higher, and generally the cost of borrow should be higher because it is speculative. So with that said, there are people who like to do it tactically. People like to say, okay, I think the volumes are going to increase in the Atom pool, so I will leverage up to 3 times my liquidity provision position by borrowing USDC or Atom from the vaults. So the vaults thing is a really big improvement for us. We're super excited about that. We'll open up a whitelist for perpetual trading. So we'll have perpetual trading for Bitcoin and Atom. I think we might have enough to do Ethereum as well. So our Bitcoin pool is coming up on $1 million. So we're super excited about that TVL. Our total TVL on chain right now is about 3.25 million, which we're really, really excited about to be, that at this point, only 4 months in after our launch. So a lot of really great things coming on the liquidity side. We just opened up a Babylon pool last week. We have, we're in talks with the Babylon team. Hopefully, maybe if they're nice enough, they can throw some in there for us. And then we have a lot of great integrations that we have set up with IBC Eureka. So that's how we were able to get Bitcoin, which is wrapped Bitcoin from the Ethereum network, as well as Ethereum, and then Pax G. So it's the Paxos Gold. So circling back to RWAs, this is actually our first real exposure to RWAs is Paxos Gold. So for those of you who are not familiar with Paxos Gold, they actually, I believe they're based in London. I believe they store the gold in London, but they actually physically purchase gold and they put it in the bank vault, maybe various vaults. And then they issue Pax Gold tokens relative to the amount of gold that they own. So it's physical gold, but tokenized and redeemable for that gold. And apparently you are given like serial numbers and all that stuff, according to their website. So We like it as a balancer, so to speak, in our platform, where somebody can come in and say, I'm not sure if I want to take the risk on some of these assets. They're too speculative. They keep going up and down way too much. Why don't I put 5 or 10% of my portfolio? Maybe 10% is too high, but let's say, well, why don't I put 1 to 5% of my portfolio into Paxos Gold, and I'll just buy some of that, or I'll provide liquidity in that, and that'll just be like it'll just hang out in the corner for me. And that's typically how gold investors do it. So don't believe anybody who tells you that they go 100% gold or they're like 80% gold. That's not true. I guarantee if you talk to any financial advisor out there or any money manager out there, they'll tell you the average gold position among high net worth clients is between 1 and 5%. So don't go crazy with it, right? Yeah. It is a boring asset. So I just want to point that out, because I think things get sensationalized, right, in the social media world. They're like, oh man, they sold all their stocks, they went to gold. No, nobody does that. Nobody does that, right? Like that's so. Well, and
probably so good to just insert like a lot of different projects, a lot of different wrapped coins. Like, do your own research on all of them. Do make sure that you feel comfortable with your risk portfolio. You know, we we in the blockchain world are super excited to bring new products and you know, have a bunch of different opportunities, and most of them are permissionless. But I would ask, you know, just everyone should do their own research on their own risks and before making any you know, any purchases of anything, pretty much.
100%. Yeah, there's a risk to everything, and you know, with all those assets, they can go to zero, right? And that's always kind of been one of those things where, like, if you look at anything that you can go out there and try to earn income off of, or try to earn some sort of value accrual on, you'll always take that risk. That's just the way that is. If you purchase a piece of real estate, there is no guarantee that the real estate goes up. In fact, the residents of Flint, Michigan understand that in a very negative way. So there's
no risk. That would maybe be the time to do a little extra research.
yes, absolutely. So there's really great words of wisdom right there, Deb, because you know, the thing that I try to do is I want people to just temper what they see on their like crypto Twitter, right, or any of the social media that they follow. You're gonna get very sensationalized news. You're gonna get all this like very hypey type stuff, and I just don't want you to think that just because some KOL or some influencer went out there and said, I'm all in on this and that, I can promise you that's not what they're doing. Okay. I talk to KOLs. They are not doing that. KOLs are very well diversified. They, you know, the average KOL that I talk to is maybe invest like if they're pumping up a token, they maybe invest a couple grand in it. They're not putting their life savings in it, which a couple grand may be a lot to a lot of people. But when you think about how diversified they are, they're spread out over many tokens. So again, don't fall for the hype. Do the research, like Deb said. Be careful about, you know, when somebody tells you that there's no risk. There's always some sort of risk, and then you'll be able to just navigate these waters in a much more like methodical way instead of having to chase. And that's really important. And when you have market downturns like this is your opportunity to really like sift through all of the damage and the rubble and figure out which ones you want to be in for the eventual upswing. And I think that's really important. And the last thing I'll mention about this, because I think we don't get to talk about it enough, is we have, according to crypto market cap, it's in the millions of cryptos right now, right? Because anybody just goes ahead and launches a token. It may never do anything. It may just die the next day, but it still goes on record as a token. But let's say you have a few 100,000, like, you know, actual projects out there, tokenized assets, chains or dApps, right? Layer 1, layer 2, or dApps. Should they all exist in 5 years? The answer is very obviously no. So I don't think we talk about that enough, that just because the crypto industry will go up in market cap, just because there will be mass adoption, there will be more people coming into the space, doesn't mean that the hundreds of thousands of cryptos today deserve to exist. And that's really important. So you should be very, very judicious. You should have high standards for what you invest in. You should know your team. You should know what they do. You should be able to interact with that chain and get some utility out of it. And I would say that if me personally, my thought process on this is, if I can't put my hands on that chain or that app and use it and do something with it, then it's not for me, right? That's the way I look at it. It's just, I would rather not be in a wealth transfer mechanism. I would rather be in something I can use that has like an opportunity to generate revenue. And again, this is why I get so excited about Althea, because I will be a user. I will be property owner on Althea, because it's a revenue stream for me, and I want to diversify my revenue opportunities. So those are the things, you know, I hope that, like, as we continue to mature in this industry, we understand what will win in this space and what should not win, because those are going to be your easiest ways to kind of like create your shopping list, so to speak, in times like these where you figure out what you want to be in.
Yeah, it is really a great time to get involved and come in and participate. I mean, I love to kind of like what you said the last time we talked about being like an activist community member, right? Like, be involved, go kick the tires, get involved with it, make it better. Most things are, there's governance, there's ability to be part of that community and be part of that chain and shape that future, not only just be a user of it. So we very much invite y'all to check out Elys, and also we're doing the IFI testnet right now. Jump into our Discord. Would love to have you on board, kind of like I said, kicking the tires, giving some feedback, making it better, easier to use, and or suggesting ways that we can work together and form these kind of alliances and partnerships to grow a wider audience. So definitely appreciate you being on. We'll love to have you on again sometime, and look forward to the next time we talk. And where can people find out about Elys? Where's your community located?
Yeah, thank you, Deb. So we're on X, formerly Twitter. So you can find us there at Elys_network. Elys.network, our website. And if you want to play around with our app, it's app.elys.network. Very easy to get on. Even if you don't have a crypto wallet, you can just get on with a social account and have there's a wallet created for you. And then you could use that as a starter. You can play around with it. And if you decide you want to stick around, you can also just connect the Ledger or a Kepler or MetaMask, etc. So yeah, let us know. Give us your feedback. There's a contact link on the app anytime you want to send us feedback, or anytime you want to just chat with us. You can also hit me up directly on X. I'm always available. My DMs are open. If it gets lost in the spam folder or whatever, just maybe see if you can just ping me some other way. I'm also on Discord. Discord is Elys Network. So you should have multiple avenues to be able to get a hold of us. I'm always available to talk. I try to talk to everybody I can. It's really important for me to stay close to the user level, because I am a user of Elys Network. In fact, I provide liquidity and I stake. So for me, I like using my own product, and I think founders who use their products are probably pretty good founders versus founders who don't use their products, which there are quite a few. So with that said, I would love to, the next time, Deb, if you guys can do a product demo for us of Althea, and like what type of like revenue opportunities there are, what type of infrastructure you guys are offering for like fractional ownership. I'd love to see those because I think users who are probably looking for like a way to actually interact with the platform would probably love to see that, and then we could kind of do it live and see how it goes. What do you think?
Yeah, I love it. Let's get under the hood and see liquid infrastructure, watch how all of that works. I mean, it's one of the great privileges I've had is being able to see it in action. So we'd love to do that. I guess that's awesome. Great. And folks, I'll be in Dubai along with some Althea team. We can get some shirts. So if you are coming to Dubai for Token 2049, please do ping us, and we'd be happy to meet up and make sure you get some merch. All right.
Can I get one of those shirts, by the way?
Yeah, absolutely.
Those are awesome. All right. I'll wear it on the next one.
Nice.
Awesome. Thanks, Deb. I appreciate you having me, and thanks to the community for tuning in. And I look forward to the next one.
Absolutely. Thanks again. Have a great day.
Cheers.